Well, with all the indexes we have to choose to trade, which one is the best? Does it even matter? Well, today, Thomas Nesnador, Mr. Breakouts, have joined us to discuss which is the best index to trade right now. Welcome, Thomas.
Thank you very much. I'm happy to be back. Thank you for the introduction. And we have a really interesting topic to talk about today, as usually in our Index Master in November.
Exactly. So, what have we covered so far, Thomas, in this series? So this is the third one in the series, right? So
correct. That's the third one. So Let me remind you, the first one, and you guys need to watch this one. We used a very simple, we called it a 5-minute strategy, which we actually constructed in front of the eyes of the audience in TradeStation to prove that building strategies on indexes can be rather simple, taking advantage of some strong biases and some strong tendencies. And tendencies is also something we talked about last time when I shared some deeper statistic and some deeper tendencies that can be utilized to improve your breakout trading or general any kind of trading on indexes. And today we will talk also, because so far we talked more in general in indexes, about indexes in general. But today I'm going to present another analysis, another numbers, and we're going to talk about what could potentially be the right index market to pick for 2023. That's a good question, isn't it?
It's a very good question, yeah. Now, some people might say, well, the indexes, they're all kind of the same, right? They all go up and down at the same time. There's a long bias. Why does it matter which one to pick, or does it even matter?
That's a brilliant question, Andrew. I thought it doesn't matter. I thought that we will live with all these telling about biases. And you know what happened? You know, it's funny because sometimes you're like, everybody talks about the long bias. Does it matter? Doesn't it matter? And then you do an analysis and let the number speak for you. And I found a shocking change in index markets that I think many people are still not aware of. And I really didn't expect it. And I'm going to share it with you tonight because it's something new and something that blew my mind, because it definitely does not confirm that indexes are long biased, not anymore.
Oh, the mystery. I can't wait to see that. So before we get into it, how about let's say hello to our friends in the chat. And I've actually just posted a question in the chat just to get some feedback. Which is the best index do you think, or which index do you think is the best to trade? So let us know in the chat. But we've had some good mornings already from Dave. He says, sunny morning in New Zealand. Half your luck, Dave. It's cold and wet here, I think. Good morning, Jeff. Cold and dark in the UK. Olga. G'day, Olga. Good to see you. Hey, Chris from Oregon. Anil. Yes. Okay, so thanks for joining us today. This is going to be a ripper of an episode. So perhaps, Thomas, should we get started?
Yes. First of all, great to see you guys. Hi again, as usually. We have some really, really dedicated guys here being on the show almost every Tuesday, and we both really appreciate that. So that's amazing. Now let's talk about best index to trade right now, or in 2023, if you will, because it's coming very, very quickly. So, you know, first of all, before I show the statistic and the numbers, let's do a quick recapitulation about indexes that we have to trade here. Let's see what is it that we can trade. I'll be talking only about the E-mini versions, because I assume nobody trades the big indexes anymore. And micro is pretty much highly correlated, or nearly 100% correlated with E-minis. So let's have a look what we have here. So when we talk about indexes, we talk about the major five, right? We talk about E-mini S&P 500, which is ES. We talk about E-mini S&P 400, which is EMD. We talk about E-mini Russell 2000, which is RTY. We talk about E-mini NASDAQ, which is NQ, and we talk about E-mini Dow Jones, which is YM. Now, I wonder, guys, which one do you trade, or which one is your favorite? Could we bring some replies on the screen? I'm really curious. Give me some hint, give me some reply, because I'm really curious if you are trading the one which I would recommend for this times or for the next year. So if you guys trading any of these indexes, or you plan to trade any, what is it? And we have some answers coming in.
Yeah, we do. I was interested to see who's going to say trade them all, but here we go. So we've got. I'll put them up on the screen, eh? We'll put a couple on the screen here. So Neil likes the NASDAQ. I think Neil mentioned that in the previous episode, why he likes that one. It moves quite a lot. Nate is into the S&P 500 ES, same with Olga.
Cool.
Bill likes the NASDAQ as well. Oh, I missed Bill. Sorry, Bill. There's Jamie, ES. And Juan, here we go. Juan as NASDAQ, ES, and the Dow micros.
Cool. Nice, guys. Good. Great. Let's see if you're in the right market, because it's going to be interesting. So let's talk, we're all about numbers. I'm always about numbers. Numbers is what will tell us the truth. And we always need to make our decision based on data, not based on the hype. We're all about data. So let's get to the next slide. And I'm going to explain again what I did. And I already explained this to you in previous episodes, so it's nothing new. But I done some very simple analysis on indexes. And the easiest analysis I did is just I simulated what would happen if you buy on open of every day and exit on the close of every day. Again, this is something I already explained the previous episode and the episode before that as well. So I highly recommend you watch both episodes. And if you do a simulation like this, you get a pretty good idea, not only what would be the average trade, but also what would be the tendency, what would be the bias. So for example, if we take 15 years of data on E-mini S&P 400, which is the EMD, and if we buy on every day on the open and exit on the close of the same day, during 15 years, we have about 3,500 trades. And on average, on EMD, the average would be $3.8. Now, this absolute number is not that much important, although we will use it a little bit later as well. What we can see really here is that there obviously is a long bias, because if we would do the same thing on the short side, we would sell short on the open and we would cover at the end of the day, we would end up with minus $3.8 average on trade. Now, what's really interesting, if we do this across all these 5 indices, what we can immediately see, first of all, and that shocked me, Andrew, there is one market which has never actually had long bias.
Wow.
Which is E-mini Russell 2000. Now, go figure. This really surprised me. I did not expect this. I expect Russell to be as long biased as any other index. Well, this is what the data say. So it's not really true that all the indexes would be long biased, which alone, this information is it's a pretty essential information. And if you think about it, what is the biggest challenge of index traders?
I think it's well, we can wait and chat and see if anyone wants to answer that one. But I think short strategies or shorting is probably one
exactly
of them. Or bear markets.
Exactly. So we all struggle with short strategies on indexes, and we're making a lot of money when markets are going up. It's a different story when we have a bear market. And the thing is that we can obviously create short strategies on indexes, but we always struggle with sample size because we don't have enough occurrences which would be bearish and we could test our edges on. Now, you see, we all of a sudden, just based on this very simple analysis, we have a potential solution. So we can complement a long bias market like EMD or E-mini S&P with short bias market like RTY, and we can try to create a short strategies on RTY. I think if you will try to do this on E-mini S&P, it will be a lot of hard work. Whereas if we try to do it on RTY, well, we might get a better and quicker results, and it might be less of a work. So I think this information alone is already pretty neat. Now, what we can also see here is, and stay with me, guys, because we will push this a little bit further in a minute. What we can also see here that the average is $9.8, and we can see that we have basically three markets above average, which is ES, NASDAQ, and YM. So whoever said that he's trading ES, NQ, and YM 5 minutes ago, that definitely is not a bad choice. And we can see that we're pretty below the average with EMD, and obviously we're totally up with RTY, which again, to my surprise, is not bullish, it's bearish. So this selection alone, this simple analysis alone would already suggest that trading ES, NQ, and YM would be a pretty good pick for the beginning without any necessity to go deeper. Now, it's never so easy in trading, because we need to bear in mind that we must focus not only on long-term tendency, which is 15 years, but we also have to see, has something changed recently? Are we in a different environment? How about now? So that's why I always, and again, you saw this in previous episodes and you will see it in upcoming episodes as well, I always complement any longer term strategy with a shorter term, and I use 3 years. 3 years gives us good of a sample size, about 1,000 trades with the same analysis. And the markets nowadays are very similar to markets 3 years ago. Now, we have a great comparison. And again, when I finished this analysis, I was totally blown away again. So not only it's not true that all indexes are long biased, they're not anymore, but now we see two heavily short biased indexes. It's EMD, is RTY. Now it's even more surprising because there should be kind of a correlation between EMD and ES. These are not so much different or distant market. Yet we can see that EMD got really bearish last 3 years. So again, surprise, surprise, surprise. First of all, we cannot say that all the indices are bullish anymore. Second, now we have two markets to construct our bear strategies on. And I think that's amazing news.
That is amazing. I'm quite surprised just looking at these numbers here. I'm a little bit shocked. I didn't realize.
I was shocked as well.
Yep.
Now, there are other things that we can read from this chart. So first of all, again, very good news. ES not only is stable in its bull tendency, but also the average trade is increasing as volatility is increasing. So we can see a pretty good stability in E-mini S&P, and that's good. That's the number during last 3 years. That's something I would expect. I would perhaps expect a little bit higher, about 25, even up to 30, because we have double the volatility. But this is a fair number, and this is also, there is some stability. We can see a very, very good improvement in NASDAQ. So NASDAQ obviously keeps its bull trend, and we all know that the volatility is crazy in NASDAQ compared to what it used to be. So again, very fair number, reflecting the reality pretty well. What again shocked me was that actually the volatility in YM has dropped. I did not expect this. I would expect that the number of YM, the average trade during last 3 years, would be a little bit higher, like with E-mini S&P. It's lower. So it means we're getting less volatility in YM, and it means that maybe it's harder to make money in YM than it used to be before. And I think some traders, they do confirm that. So I still think that YM, it's not a bad market. I like YM. I still have it in my portfolio. But now, guys, you have a clear analysis, clear numbers. What would be your winner? What would you pick? And then I'll tell you mine.
Oh, that's a good... in relation to what, Thomas? In what context? Which market would you pick?
Which market would you pick to trade as one index in 2023?
In 2023, okay. All right, so let's see. We've got... So actually, while that's coming through, one has a comment. Let me put this on the screen. I'm not sure I can see where he means this one. Maybe you'll get it, Thomas. Why is average trade the same amount in long and short?
Easy, Juan, easy. What happens if you buy? What happens if you buy every open and sell it at the end? Well, you have average trade 3.8. What happens if you sell every bar at the open and then cover at the end of the day? Well, you still have 3.8, just negative number.
Yeah.
It's still the same. The movement is still same. It just, you have just a other direction. That's why plus changes to minus, but it's still the same volatility, still the same movement.
Yeah. Okay, we got some responses in the chat. Here we go. So Olga says NASDAQ, Jeff, ES, Bill, NASDAQ, Giorgio, NASDAQ, Carl, NASDAQ. So we got quite a few NASDAQs. And then Neil, NQ.
3 NQs, new trade, 3 contracts in NQ, yes. Cool.
So NQ and then 1 ES and YM.
Okay, let's have a look on a chart, which is on the next slide, and then I'll give you my answer.
Okay, so going to the next slide.
So you guys narrowed it down perfectly. That would be my way to narrow down to NASDAQ and E-mini S&P as well. Very fair, very good, well done. Now, we did a data crunching analysis. We use our numbers. But now, if we want to make a decision and follow just one of them, we need to also look at the fundamental underlying, let's say, characteristic. What is it that drives this market? What is different fundamentally? And the difference is that NASDAQ is a tech index. We all know that. And tech was here after ES. Tech was driven, especially last, let's say, 7, 8, maybe 10 years. But if you are watching markets nowadays, tech is also what is going down the fastest. Like, have a look on Facebook. We're down from 400 to 100. Let's have a look on Netflix. Let's have a look on a lot of tech companies, and they're going down faster than other companies. So I think that we're dealing on NASDAQ with kind of a tech bubble, which is getting back to its mean. It's reversing back. Whereas with the E-mini S&P, we're trading 500 very mature companies, which are not behaving so differently compared to what they behaved 15 or 10 years ago. So my pick would be E-mini S&P, because my gut is that NASDAQ is reverting. We will see less of a bull trend. We will see more of a correction, which is actually happening. Whereas from the data and also from how I see fundamentally E-mini S&P, I would say this is more stable, and I would pick E-mini S&P for 2023. And actually I did, because today I recently had a new idea for an index trading, and today I finished a new E-mini S&P strategy for 2023. So that would be my pick, guys.
It looks like, we've got quite a few agreements in the chat. Even Carl said, I am ES biased.
Ah, cool.
So you're in you're on the right side, Carl.
Bold.
Good job. Yeah. Now, there was actually a few questions about, or statements about EMD in the chat. I'm just going to scroll up to them. There was something from Neil. Now, just for memory, when you showed us that chart, I think EMD was 3.8 in average trade. Okay, here's Neil's comment. EMD is surprisingly illiquid compared to others. And then also a comment about EMD from Olga. Maybe you can group these together in your reply, Thomas. Volatility increased tremendously in EMD as well. So if you look at liquidity, volatility, and a low average trade, what kind of impression does that give you about trading EMD?
EMD, it's an interesting market. It was never difficult to develop breakout strategy on it, but it was never easy to trade it. Quite a dichotomy, right? Like quite a contrast. It's one of the easiest to develop a breakout strategy on, one of the hardest to trade a breakout strategy on, because we have we can get really big slippages on EMD on both sides, negative and positive. And that's part of the volatility, because sometimes we have calm days on EMD and we trade peacefully and calmly. And sometimes we get higher volatility, and slippages can get really nasty because of it's less liquid than other markets. So I agree with you. There's less liquidity. So we will have slippages. On the other hand, there can be a very good volatility. So we still can compensate for these occasional slippages with good average trade. And it's easy to develop strategies on AMD, but not so easy to trade them.
Yeah. Okay. And a question or comment from Dave here. So you would say ES has more stable behavior based on the data you showed?
I would say ES has got rather stable behavior, most stable out of these. Well, right now, since recently, we also had a pretty stable behavior in NASDAQ, although very volatile, but steadily coming up. But as I said, I think these days are over. So yes, I think S&P is still the most predictable one. And that's what I would pick, yeah.
We got a comment here from Neil before we move on. I would not trade EMD for all those reasons. It should not make the list. It sounds a little bit harsh. It should not make the list. You mean the list of markets to trade?
Neil, you know, sometimes we need to be a little bit adventurous. Otherwise, trading would be too boring.
All right. Well, I think we can move on. There's a question. I think this is a question from Nate. Maybe we'll look at this one. If you buy Globex, open and sell at the end of next day, have you done that research? With regard to ES or micros?
No, I did not,
Right,
because yeah, I didn't need data for this.
Yep. All right. If you do that research, Nate, let us know. Okay, so I think we can continue. Thomas?
So there's one more thing. So we have the winner, ES. And now I want to show you, this is just, you know, as an example. There is one specific thing about E-mini S&P. If you go down this road, I pulled out strategies from our database. Strategies, breakout strategies based on the breakout model, which I presented in my book, Breakout Trading Revolution. Again, if you don't have this book, you can get it on www.breakouttradingrevolution.com or on Amazon. It's on Amazon now. Just go to Amazon and find Breakout Trading Revolution book. It's all there. As I said, this is an example from the database. Now, one observation I have about E-mini S&P, it's getting harder to build and trade day trading strategies. So for example, this is an example of day trading strategy, and you can see that the true out of sample is not as perfect as the in sample, although it's a compiled out of sample equity, but I call it in sample. Whereas on the right side, we have true out of sample. So we can see that there's less stability or predictability. Whereas if we move to the next slide, we still can have a pretty, at least from my experience, the stability in swing strategies on E-mini S&P still seems to be better and more predictable. And these swing strategies are usually held just a few days, between 1 and 5 days. So my final advice for 2023 for index trading would be not only that ES would be a good pick, but also if you focus on swing strategies over day trading strategies, you'll probably have your life a little bit easier, and there's a good chance that you will see better stability in real trading as well. So that would be my final advice regarding selecting the market for 2023.
Yeah. And do you have any examples of short strategies in I'm just trying to remember which market was it? The Russell, I think you mentioned, was good for shorting. So you're doing any research there?
You're too fast, Andrew. I still have to build them.
Okay, fair enough.
It's on my list. After this analysis, it's on my list, but didn't get to it yet.
It's on my list as well. It's been very challenging creating short strategies for index markets, and now that one little tip, I'm sure it's going to make people thousands of dollars. So thanks for sharing that, Thomas. Very interesting.
Yeah. But it was difficult because we were trying on E-mini S&P. I don't know which market you were trying. I definitely were not trying
Same.
RTY or EMD. Yeah. So now we know. Now we're smarter, and now we know how to do it properly.
Yeah. All right, just looking in the chat, there's no comments. Everyone's off creating short strategies for RTY. So good to see. So I think there's another slide here, Thomas. How about I pop that one up on the screen?
Yeah, we have one more thing to cover.
Yes.
So again, a reminder, guys. So all we're covering this month about indexes is just a tip of the iceberg. You say in English, right? Like tip of the
That's
iceberg.
right. Yeah, you got it.
There is way more. I've done a tremendous amount of different analysis, crunch a lot of data. This we could not squeeze it here into 30 minutes, not at all. But just a reminder, just in few weeks we are running an index mastery workshop where we will go even deeper, and I will present things that I guarantee you have not seen before. Very data driven, everything very, very provable and very practical to implement. So if you're interested, don't forget to go bta.com/indexes, leave us your email, and we will let you know whenever it is ready.
Yep. Exactly. And I think you're going to share a lot of valuable information there. And what you've shared today is just a taster of what we can expect when we launch that. Excellent. Well, Thomas, there are no other questions in the chat or no comments. So, we've got one from. Let me switch the slides off. Nate says ES is the king, the most volume. So Nate must be a heavy hitter.
I cannot argue with that.
No, can't argue with that. All right. Well, if you enjoyed the show today, hopefully you did. Hopefully you got a lot of good tips out of or from what Thomas has shared. Please give us a thumbs up on the video, and don't forget to hit the subscribe and bell buttons so that you get notified whenever new content is released, because we do actually release content outside of these live shows. So make sure that you don't miss out on those. So hit subscribe and the bell. And Thomas, any closing thoughts before we wrap up for today?
More is coming, guys. We still have 2 more episodes left for the November Index Mastery. More is coming, more data, more cool stuff, more proofs. And once we are done, we will continue with the Index Live workshop. So please bear this in mind and be back next week, because I will share another very cool stuff. And please give us thumb up. It helps the algorithm. It helps us as well.
Yeah. So more. That reminds me, was it Neil earlier? NQ.
NQ. No, ES. Neil, ES.
Okay, we got a couple of thanks in the chat, so I might just show this up on the screen, and then we'll get on with our day. So Olga said, "Good show, thank you. Glad you enjoyed it, Olga."
Thank you,
Dave. Thanks, Dave, for joining us. Here we go, Giorgio. Thanks, guys. See you next week. Absolutely, we'll be here. We'll be looking for you. Jeff, thanks, Jeff. Chris says, thank you, gentlemen. Thanks, Chris. And here we go. Closing comment from Neil. Look at your data.
Neil, you need to watch the recording again. It's not NQ anymore.
All right. Well, thanks again. Thanks again, Thomas, for sharing your insights today, and thanks for everyone for joining us. And
thank you.
Hopefully, you got a lot of good value, and we'll see you next week at the next one. Cheers.
Happy trading.
Happy trading.